This is the live version of the Andrew Hines Real Estate Investing Podcast, which this is round 2. And Shawn, thank you so much for doing this.
Yeah, man, I'm super excited. This is actually the 3rd time I've been on this.
Yeah.
That's crazy.
You're the only three-peat. You're the only,
am
only
I?
guy.
Am I the first
no one
one?
else has done 3. Yeah.
Yes.
But you were on early, right? You were on first 20 episodes, and then again 37, I think you were on. And,
yeah, man. Actually, I think when I came on, and this is so good for people to see, is that you'll see actually like the mindset perspective shift on how I was thinking before and how I'm thinking now.
Yeah.
And when I first started, I think I was on your podcast after I just bought like my first duplex. It's like my first or second duplex.
Yeah, you've come a long way. And now, how many properties are you at now?
Well, I started doing some land acquisitions, but like real estate, physical, brick and mortar. It's like 16 buildings, like 45 rental units or something like that.
Wow, man, you've been crushing it. I think you're doing some stuff with Jacob Perez as well, are you not?
Yeah, Jake. You know what, Jacob? Shout out to Jacob. I love giving Jacob a shout out because I gotta say that Jacob Perez at Synergy Mortgage, he literally changed my life. Like, if I didn't meet that guy 3 years ago, I don't think I'd be where I am now.
Yeah. Well, and he's got a good mindset too, and he's crushing it. And you guys are both multiple podcast guests, so been doing it well. So you guys bought that 8-unit building together, I think, in Sarnia area.
Yep.
Okay.
Yeah, we bought that last year. I think he broke down the numbers on his last podcast with you on, what it looks like, whatever. But it was a great investment. It was a COVID special.
Awesome. Okay, so Shawn, walk through just a quick elevator pitch where you started to where you are now in kind of 30 to 60 seconds.
Okay, so elevator pitch. About 3 years ago, I bought my first duplex that was like an initial investment property. I bought that in the Niagara region. My focus has been in the Niagara region for the past 3 years. So going back just a little bit before that, because I need to share this, because I need people to understand that I started with zero. I started with $0 in my pocket. I was probably negative $25,000 on credit cards. And I didn't know how to get out, and I didn't know how to escape. And it took me educating myself, reading the right books and everything to get into real estate investing. And what I did was 3 years ago, I bought my first duplex and I BRRRR'd that. So if you don't know what the BRRRR strategy is, just watch some other episodes. You'll learn what it is. But the BRRRR strategy was how I executed my first investment. I did that 7 times on my own before I started partnering with other people. So I rinsed, repeated, using capital that I had, purchasing properties, renting them out, refurbishing them, refinancing them, and then repeating it. And I did that multiple times over several properties. And once I was able to do that, that's what attracted joint venture capital. So that's what attracted other people to say, Shawn, I want to invest with you. How can I do that? And that's how I was able to scale my portfolio to where it is now.
Yeah, it's so important to have that litmus test, to be able to show people you're doing it, because people are attracted to action. When they see it happening, they see you having success, they want to be a part of it, and they believe you can recreate it for them, right? It helps raise their belief level in terms of what can be done, what you can do with them or for them.
Yeah, absolutely. It's basically proof of concept, right? So for you to do anything in life, you need to have a proof of concept that you've done something and you can repeat it and you can do it again and again. And if you have that, then somebody else is going to believe in you and they're going to say, you know what, Shawn or Andrew or so-and-so has done this repeatedly time and time and time again. So I trust and I have faith that if I put my money to invest in this, then I think that they can execute and they can deliver and do it again. If you've never invested in real estate and you're looking for joint venture capital and you have no proof of concept and you've just went to a seminar for a weekend and you spent $5,000 and you think you're good to go, I don't know if that's the right move.
Yeah, probably not the responsible move either. I know we've talked about this on the show before, but I mean, if you're not confident in what you can do, you shouldn't be borrowing other people's money. So you might need to be the apprentice for a little while and go work for someone or pay for the coaching or whatever works for you. So that makes perfect sense. So anyone watching and not catching the replay via audio will see that you've got some palm trees in the background. Tell us where you're at.
I'm in San Pedro Ambergris Key. So if you don't know where that is, it's a little island off the coast of Belize. It's like a 15-minute flight from the coast. And it's like beautiful island. I feel like COVID doesn't really exist here. We won't talk much about COVID, but it's just different lifestyle here. Very, very different. People are friendly. Food is great. Lots of entertainment. Good real estate investing. If you're into real estate investing because you're watching this, it's a good place to invest in real estate. Really
Why
nice
is it
place.
a good place to invest? Tell me what you like about it, what you don't like about it.
So what I realized from the first podcast when I spoke with you, Andrew, I was trying to create financial freedom for myself, right? And we've talked about cash flow, and how important cash flow is, right? Why do we want cash flow? Do we want cash flow just because we want the paper, or do we want cash flow because we want freedom, right? And the reality is that the money isn't important. It's the freedom that we want. We want the freedom to have time to do whatever we want with our time, and cash and money is what creates that freedom. So when I first started, I was focused on cash flow. How can I build more cash flow? How can I buy more assets that create cash flow? And once I hit a certain number, whatever that number is for yourself, right? Some people might say it's 2,000 a month. Some people might say it's 5,000, 10,000, 50,000, 100,000, whatever the number is. Once you hit that, you've reached like a certain freedom for yourself. And what I want to focus on now, I have three daughters. I have a wife. You know, we have a big family, not a huge family, but it's a decent sized family. It's almost a soccer team. And I want to create some type of lifestyle that everyone can enjoy, not just like working, hustling to buy more properties, hustling to make more cash flow. I wanted to actually enjoy the money that I've been making. So I moved here. I didn't move here. I moved some of my investments here, and I started buying some real estate here. And so that's why I'm here right now.
Do you see cash flow being a reasonable expectation where you are?
Yes. So there's definitely ways that you can make cash flow. I started investing here about a year ago. So a year and a half ago, almost January of 2020 was when I bought my first asset here. And I didn't know exactly how I was going to cash flow, but I knew I needed to invest in here because I talked to another investor who started here about 20 years ago and retired himself. And so, you know how we talk about don't reinvent the wheel?
Yeah.
So I didn't want to reinvent the wheel. So I asked him, how did you retire yourself off of land on an island? And he explained it to me. And it's really, really simple. There's no secret. You buy land for cash, and then you sell it to somebody else who doesn't have the cash, but you give them a VTB, and you're the bank. It's as simple as that.
So you're buying, repeat that again?
I buy land for cash, then I sell it to somebody else who doesn't have the cash to pay for whatever I'm asking for. So let's say I buy something at 50, I'm going to sell it at 100. Somebody doesn't have 100, but they have 20,000. So they can give me a $20,000 down payment. And then I will be the bank, and I will give them an 80% VTB on that land for 30 years. And that's how I get cash flow.
And what kind of interest rate would you do that at?
10%. The one that I did this week is a 10% interest rate for 30 years.
10% on a 30-year amortization.
Yeah. Okay.
And that's easy to do for anyone wondering. Like, you can actually just go to an amortization table, and then you literally send that to both parties, and you guys agree this is how the payments break down.
Exactly.
You're on the same page. So that's not as hard as it might seem to anybody. It's really, really simple with online mortgage calculators.
Yeah. Super, super simple. That's one way that you can make cash flow. The other one, which is obviously what more people are knowledgeable about and know how to do, is you just buy a property here and you short-term rental it through Airbnb.
Yeah. So you can definitely do that. Just going to pause from this for just a second, guys. If you're watching on YouTube, just let us know where you're watching from in the comments there. Shauna, you can watch as well. And then, guys, if you have questions, you want to ask Shawn a question, this is interactive. We're not just doing this live for the heck of it. So ask us a question if you're wondering about how Shawn does it in Belize, maybe wondering about how he's filing his taxes or whatever. Any question you've got, go ahead. I'll keep asking the questions that come to my mind though. So on that note, what are you noticing is like just a lot of extra work for you from the international element, like investing in Belize versus what you were doing back home in the Niagara region?
So the one barrier that I was able to get over, which was in the Niagara region, I've been managing, let's say 70% of my portfolio. The other 30% has been handed off to property management. That 70% was because it's so close to me. It's literally like a 15-minute drive. And like, there's many other investors that we know that say, you know, I keep all my properties close together so that I can just drive to all of them and I can like do stuff quickly. So I keep them all in the same spot. So I had that same mentality. And what I realized from coming here was that as soon as I left here, I set it up kind of in advance. So what I did was I told all of my tenants who had my phone number and had been texting me that they're no longer going to be able to reach me at all, period, through phone. They will have to send me an email address. And that's the only way they can communicate with me. And then I told my handymans that any email that comes through to me for any maintenance requests, I will just be forwarding that directly to them with the address. So that was my first like thought of how I can manage stuff, right? And I ended up doing that. I've been here for like 5 weeks now. It's been working okay, but what I realized was some of my tenants who don't normally pay on time, they didn't text me, they didn't email me that they're not paying, and I'm not texting them back either. So I wasn't getting payments for like a couple of my properties. So what I did was I called a property management company, a friend of mine who owns a property management company, and the biggest pain in the butt units that I have, I handed those off to property management this month. And I just said, I'm just not going to deal with it. And I'm going to let them collect rent. Although they can collect the rent for me.
Some properties are just inherently easier to manage than others.
Yeah.
I really find that like my certain student rentals, they're so easy. I would never really need management. Like I just have somebody I can call or a handyman I can send stuff off. But there are other properties that just turn over every year for whatever reason, and they're just a pain. You know, just the tenant type they attract. So good on you for kind of identifying those and just eliminating them. Right? It's like the 80-20 rule, right? Those maybe 20% of problematic properties, by delegating it off, you eliminate 80% of your headaches.
Yes, exactly. And so with that being done now, I feel like my mind is a lot clearer with what I'm doing here. And I've been able to actually focus on some investments here. And in the last 5 weeks that I've been here, I've purchased more real estate while I'm here. And it's just, I feel like very focused, you know, because I'm not having to think about the stuff I have over there. So I can focus on what I'm doing here. And I don't know, man, I just feel like everything's aligning, you know?
Okay, we're going to crunch the numbers on kind of what one of those purchases look like in just a second, but there are some questions here. So I'm not seeing the questions. So they're on the actual YouTube stream. If you go to my YouTube channel, you should see it. I can share the link with you on Zoom here. Okay. Let's just see here in the chat. Okay, it's in the chat on Zoom. Just mute it when you click through, otherwise you'll get feedback. Okay. But okay, so Colton asked, Shawn, would you move to Belize for one day for good? And if so, would you become a real estate agent?
Okay, so moving. What? There we go. I gotta mute that. All right. Okay, so Shawn, would you move to Belize for good one day? If so, would you become a real estate agent? So would I move here full time? No. This is definitely more of like a lifestyle choice to enjoy the weather. You know, you're in Florida. Are you still in Florida, Andrew?
Yeah, I'm still in Florida.
Okay, so Florida, you know, it's kind of similar, like tropical weather, right? So definitely I could be here for 6 months of the year during the winter in Canada, but I still call Canada home. I love Canada, and Canada will always be, you know, my number one spot. So I'm always going to keep a house in Canada, and I'll probably always be planning to be there for the summers and stuff like that. So no, I wouldn't be here all year round. This is more of like a lifestyle enjoyment for pleasure. Yeah. Come out, have a boat, you know, go out on the ocean, do stuff like that.
Yeah, that's kind of where I would ideally be. But I mean, with what's going on in Canada right now, it kind of makes me rethink that a bit. But yeah, certainly I do enjoy, I mean, these last 3 months have been unreal. Just the sunny weather, like I'd say 98% of days are sunshine, which is just so uplifting and so, you know, happy. So I'm into that. Anyway, so what currency are you using in Belize? Do they have their own currency?
Yeah, they have Belizean dollars, but they're pegged to the US dollar. So what is it? $2 Belize is $1 US. So you can use it's US currency here, so you can just use US currency.
So when you say you're buying for $100 or buying for $50,000, are you talking 50,000 US?
Yeah. Yeah.
Okay. So 50,000 US, something you're buying. And then what's the monthly payment you're going to make on that, combining principal and interest?
There's no financing here.
No, I'm saying, but you're financing somebody else. So I'm saying,
Oh,
yeah.
so if I was to sell that to somebody,
Yeah.
Okay, so I think the number that I just did was on 100,000. So if selling at 100,000, you're getting 720 US or 702 US dollars per month.
Not bad. And they would build their own house
years.
on it, or would they be doing like a trailer or
Yeah, they could
like that?
They could technically do whatever they want. If they default on the payment after 45 days, you take ownership again, and they lose their rights to it, and they lose all their money.
Oh, okay. Yeah. So I mean, so similar laws to here, like you have recourse if they don't pay.
Yeah, it's fee simple title. So anything that you buy here is the exact same. It's British common law, so it's fee simple title, the same as Canada.
Oh, okay. All right. So we got a few more questions here. So how does your financing work? Well, I guess you don't have it, so no chance of getting any kind of financing anywhere.
You can, but seller financing. So if you wanted to get financing, you would talk to another investor who owns something cash, and then they would finance it for you. So I'm trying to be on the other side where I'm financing it for other people.
You're financing it for other people, but there's no institutional financing down there for anyone, or just not for foreigners?
Not for foreigners. And if you can get it through, like, let's say Belize Bank, you're literally looking at 50% down with like a 15% interest rate. So
so it's not great.
No, it's horrible.
Okay. So most people are buying cash then. You get a lot of cash investors.
Yeah.
Is it a lot of kind of like wealthy foreigners that are coming to Belize?
Yes.
All right. And we had a question here from Bull Run. Who prepares your taxes?
Oh, nice. What's the question? Let's see.
Who prepares your taxes is what he asked.
Oh, I thought it was my accountant.
Oh.
Who prepares my taxes? So I have what's his name? I can send it to you, but he's a guy in Niagara region. He's over in Welland, and he does all my taxes. So the interesting thing, since we're talking about taxes, is that because you own real estate here, whether it's land, whether it's a condo, a hotel, a resort, whatever it is that you own, you can deduct 50% of your airfare as a business expense. You can deduct 0% of your hotel and accommodations, and you can deduct 50% of your food and entertainment.
Okay, under Canadian law, because you have a property here. Okay, and are you having to file something in Belize as well, or are you just file in Canada?
No, you just file in Canada.
Okay, so no income tax implication on you in Belize at all?
No, there's no income tax or capital gains here.
Oh, they don't have income tax, so that's actually a good place to be.
Yeah, this is like a tax haven for a lot of people.
Well, it sounds like I need to start investing in Belize. Is it hard to become a resident there?
50 weeks out of the year. So stay here for 5 months and 3 weeks, go back for a week, stay for another 5 months, 3 weeks, you get residency.
Okay, interesting. Why aren't more people talking about Belize then?
I've met a lot of investors in the last 5 weeks that are investing here. But maybe in our group, right? Maybe in our group, there's not tons. But I just had lunch with another Canadian from the GTA who's been investing here. Yeah.
Very interesting. Okay, guys, if you don't mind, just so more people find this video, if you haven't already, just hit that like button just so that we can get this video out there a bit further. More people can hear what Shawn has to say. But we've got more questions rolling in. And by all means, if you have any question at all to Shawn or myself, go ahead and share it. So Troy Barnes asking, in Niagara for a single family home, to have a second suite, one must be owner occupied. Are there ways around that? Is that true?
So in Niagara, for single family homes to have a second suite, one must be owner occupied. No, that's not true. So
I've never heard that. Yeah, I've never heard that.
No. So if you let's say you're investing in Welland, Ontario, R1 zoning, you're good. Any house in Welland, Ontario that's R1 zone, you can build a secondary suite. So like any bungalow that you're looking at, you can build a secondary suite. St. Catharines, usually you want R2 zoning. But single family home with R2 zoning, you can build a secondary suite. It's really easy actually to do duplex conversions in the Niagara region.
That's good to know. Okay, so let's go through some numbers here. We're gonna do a little bit of Niagara talk, and then we're gonna do some Belize talk too. So starting with one of these lots, I just want to kind of crunch. You said you'd be getting 700 and change I guess like you're not borrowing that money, or are you, like the 50,000? So that's just you taking your own investment. So you're creating $700,000 of cash flow, or sorry, $700, not thousand. That'd be great.
That'd be amazing.
700,000 would be awesome.
Yeah. So right now my strategy is, and I was literally talking to the owner of Coldwell Bank in Beverly Hills, California, in the pool right here, like about 30 minutes ago. And she told me that in 2008, the exact same shit, sorry, I didn't mean to swear, exact same thing happened in 2008, where everybody was like just buying, and they were overpaying, and everything crashed. And she saw it, and she's like, she refinanced everything and moved her investments, and she started buying here. But that was like a long time ago. That was like 13 years ago.
So she's predicting something similar happening again?
Yeah.
See, to me, it's so hard to look at this and say it's the same as what's happened in the past, because yeah, in 2008, like the crash, there was no inflation bubble really coming up to that. Like, I guess in a way you could argue that the excess loans that really should never have happened kind of created a bit of inflation because they created a little too much money in the market. But what's happened this time around is there's just no precedent. So, I mean, everything's gone up in cost, like every building material that goes into houses. What's your take? Do you see a correction coming in Canada? Do you think things just carry on and continue, or are you kind of waiting it out and gonna hold off on purchasing and wait for a correction?
So I want to be positioned. This is my advice, is I wouldn't sell everything that you have just because you think there's a crash coming, but I would make sure that you position yourself well so that if there is a correction, you can take advantage of it.
Yeah, that's the delicate balance that I'm trying to take, is figure out just how much I want to have in cash, because cash is absolutely trash right now. Like, you're losing purchasing power, but at the same time, to buy into negative cash flow real estate, I can't justify. So
no.
So it's like, what do I do? Precious metals, a little bit of some other stuff. Maybe I should get more into the stock side of things. But to me, I like real estate. Real estate's where I want my money. So I'm the type of guy that looks to other markets. I see you doing that. I want to go find where their cash flow is in real estate. So
yeah,
I guess you've sort of found that.
Yeah, and it's different, right? Because I'm not levered here, so I have zero leverage, which sucks. So I have literally zero leverage. But one thing that I have been doing, which some of my partners know because they're partnered with me on stuff down here, is I took the same strategy that I was implementing, and like literally anybody can do this. And this is why like I like to go on stuff like this and talk. That bird almost hit my head. That was crazy.
Yeah, I saw that.
I like to go and talk about this stuff because people will see that, hey, like there's actually other ways that you can make cash flow. It doesn't have to be this way or this way or this way. There's just an infinite amount of ways. And so what I did was I took the same strategy that we've been doing in Ontario as investors, where we're finding capital from joint venture partnerships, bringing that capital in, and then we're helping investors get into the real estate game. We're giving them a return on, their investment, whether it's a cash on cash or total ROI or equity or whatever it is. But I'm doing that here now in Belize. So I started on my own and I started buying plots of land and parcels of land here. And then I realized, you know what, why not bring in some other people? Why not bring in friends or family or partners who also want to invest and maybe want to build down here or maybe want to have a house down here one day? And I'll bring them in as JVs. And so the way that I've structured my joint venture deals down here is I'll find a really good deal, something that I know on the market will sell for, let's say, 50,000, and I'll find it for 25,000. And then I'll bring in a partner and I'll still put 25, 30% of the money in. And then I'll ask my partner to bring 60, 70, 75% of the money. And then we buy it cash. And that's how I've been structuring my joint ventures. And then we have a 50-50 split of ownership. And the exit strategy is you just flip it. So we just sell it for like a single amount. Somebody buys it cash, or we sell it with vendor financing, or we build something on there because the labor is really cheap here. It doesn't cost a lot to build. And then we can build like a cabana like this thing back here for like 20,000, and you can rent that out.
So for sort of $20,000 investment, you can build something that you can rent out.
Yeah.
Do you have municipal water or any of that stuff, or do you need to actually dig a well?
Depending where you buy. So in the Secret Beach area that I've been buying, there's no services there. But in town where I just bought this week on the canal, we have all the services.
Shawn, check the questions while I start my camera.
Okay. R1C zoning. RE up TV is 40K and Canadian enough to invest in Niagara or Hamilton. Troy answered, not Welland. I talked to bylaw officer in Niagara Falls. Thanks for your response, though. Yeah, so Niagara Falls is not the same city as Welland. So Niagara Falls is totally different bylaws. I personally don't own anything in Niagara Falls, in the actual city of Niagara Falls. So
if that's true, though, that actually gives a good reason not to own in Niagara Falls.
Yeah, that's one of the reason. That's one of the reason most people don't buy in Niagara Falls is because their zoning is really hard to get to work with. To work with. Yeah. So yeah, a lot of people don't buy for that reason. So Troy, you're absolutely right. And RE Up TV asks is 40K Canadian enough to invest in Niagara or Hamilton? Niagara, probably not. Hamilton, definitely not.
Yeah, I mean, 40K represents 20% down on a 200, right? That's not a lot, but maybe you could pair that up with somebody else. Maybe, I mean, if you've got some leverage against other real estate you own, you could do a second mortgage on that and get the rest. Like when I really hit the ground running in 2015, I had no cash and just a whole bunch of debt. And I basically levered up an existing property I had and put no money into the deal. I got construction financing, did everything and turned it into a profitable deal. And everything since then has really just been borrowed money until I built up my own base of money. And so there's definitely a will. Where there's a will, there's a way. 100%.
Yeah, 100%. But the reality is that our market has changed so much right now that when I was on your podcast the first time, I bought my first duplex for $153,000 that I negotiated from $299. Right? Yeah. That doesn't happen anymore.
No, well, it's just a lack of housing for compared to the demand, huge lack of housing.
Yeah, so it's hard. It's way harder now.
I've seen people share me some statistics that month to month we're down a little bit in terms of average sale price in the Greater Toronto area. So it looks like things are starting to cool off a touch. And maybe that allows more people to get into the market. I don't know what to expect. I don't know if I see a big correction happening or not. It's so hard to say. I think a big driver would be if we stay that locked down long enough, and if people have an impact on their pension funds, or if they start to see, the markets crash, that I think, could frighten people to stop spending. And if people stop spending, then we could see our market contract. So there's so many ifs. It's so hard to know what's going to happen. We're just going to have to keep our eyes open and see what happens next. But have you done any deals lately in the Niagara region or in Canada? Like what's the last thing you bought? Probably something since we last talked, other than the eightplex, because we already heard about that one.
Yeah. So I've bought a lot. I bought several, literally every single property that I bought, I've BRRRR'd, I think, except the last one. I haven't BRRRR'd that one yet. But so there was a fourplex that I bought off market. I think I paid $240 for a fourplex, and it appraised at $600 like 6 weeks later.
Like without you doing anything?
No, I spent $60,000 on renos.
Okay, so we'll take that one for example. You bought a fourplex in Welland?
Port Colborne.
Port Colborne. Okay, $60,000 in. Any carrying costs on top of that, or that $60,000 covered everything?
$60,000 was this. It was 6 weeks of reno, and it was just $60,000. That was like everything.
Okay.
Everything.
So you're in for about $300,000. New value of $600.
Yeah.
Oh my goodness. And you got a new mortgage of 80%.
Yeah, we did.
Okay, so we'll do this as an example. So, I might as well actually share this. I'll just share this since we're live. I'm going to share my screen. So advanced sharing options. Oops, share screen. And I'm just going to share my spreadsheet. Okay, so this will look familiar. Anyone who uses my spreadsheet, you can grab this on my website. But anyway, so I just made this little box up on the side. You can just type this in yourself. This is the main important part for the cash flow. But anyway, so purchase for $240,000, $60,000 reno, no carrying or planner. I'm not doing anything with that. So purchase and reno is $300,000, and then $600,000 new value. And then I just have a little formula in here for 80%. So $480,000. So you're negative $180,000 on that deal. Like you get $180,000 back.
Yeah, it was around there, like 185 or something like that.
I feel like every time I talk to you, you have a story like that. Like, oh, we put 100 grand in our pocket. We put 200 grand in our pocket. This is where all that money for Belize comes from. So, anyways, what are your gross rents on that?
All right. So I'm pretty good with my numbers. So I have 12. I got to do a breakdown because I don't know the gross off the top of my head.
Just tell me the units.
Yeah. So I'm at like 750, 700. Those are the two we kept. 1250, 1200. Two new units.
Okay, so people get a live demonstration of how I use this sheet. For vacancy, I'll just throw in 2%, but I probably won't have much. For taxes, what do you got?
3,000, they're low.
Okay, so taxes, we're gonna put those at 3,000. Insurance,
2,500.
Okay, maintenance,
5%.
5%. We'll leave that as is. Anything for water or any other utilities?
Yeah. Water, we're paying like $3,000 around there.
3,000, and then
I'm managing it.
Okay, so we'll leave that as 0. And then lawn cutting, snow removal.
No, there isn't any. There's no parking or lawn or anything.
All right, so for that, I'm going to throw in our other utilities. Do you have other utilities you pay?
Yeah, there's hydro. So for 2 of the units, we pay hydro, and that comes in about like, I want to say $300 a month. So we're like $3,600 for hydro. We got to get rid of that. But
okay, and then miscellaneous, anything else that you're paying for? Or?
No.
We'll leave $500 there just in case.
Yeah.
Okay, so this is obviously numbers are subbed in here from last thing I calculated, but we'll just go ahead and sub this in at the new value, the 600,000. So 80% of that, 30-year amortization. What kind of mortgage did you get on that? What kind of rate?
1.65.
Oh my goodness. Those are some good numbers. Okay, so you can see the monthly payment here. Anybody watching this on YouTube, and Shawn is getting $880 cash flow on something that paid him $180,000. It's hard not to be in this business when you make those kind of numbers. Okay, so something to look at here. I've got total return breakdown. So we've got 3% appreciation. Obviously that's low. Things have been going up more than that, but I don't like to bank on more than that. Then we've got our mortgage pay down, which I just do an average over the 5 years. So it's 13 grand a year roughly. And then we've got cash flow of 10.6. So your total return on that's 41 grand. And you've got negative into it. So we can't really calculate. This isn't accurate. So it would actually be a big negative number. So there's no return on investment. You're just crushing it on that one. So anyways,
that one's not bad. I mean, it's not bad. It's literally a grand slam.
That's a grand slam.
It's a grand slam. Yeah. So that's not
people
normal.
can't expect that every time.
No. That's probably like one of my best one. Yeah. That's probably like my single best deal.
Yeah. I mean, that sounds like, I can't believe you did that. So what was the secret? Why'd you find that? Like what allowed you to find that and others not to?
Oh, so I got a little bit of a story behind it, but so I started mentoring and coaching people last year, so 2020, after I'd done 10, 12 properties on my own, and I brought in some joint ventures. I lost my job. Did I tell you, Andrew? I lost my job last year. So I got laid off from my job at the beginning of COVID. So they laid me off in like February, March of last year, and I'm sitting at home and I'm like, what am I doing? Like, what am I doing with my life, right? And so I started just like literally doing like coaching calls and mentoring and talking to other investors. And then I got my real estate license last year. Well, I studied last year and I just got it like 2-3 months ago. So I'm a realtor now. But that was all because I got laid off. So I got laid off and I started coaching, mentoring, teaching people how to do stuff. And one of my guys that I was like talking to and helping out with real estate was like, Shawn, I got a duplex that I want you to come look at in Port Colborne. I went and looked at it, and to help them out and say, hey, is this a good deal, a bad deal, whatever. And long story short, the duplex, the guy wanted $200,000. It needed $100,000 worth of renovation. I told this guy that was a buddy of mine that if you spend $100,000 and you're buying it at 2, you're in it for 3. The ARV is probably only like 320. It's not worth it. It's not worth the headache. So I told him, if you want to buy it, offer him 130. And so the guy wasn't interested at 130, but during that conversation, the owner was there. And I said, if you have any other rental properties that you want to offload, let me know. And I got in touch with him after the fact. And he told me about this fourplex that he wanted to get rid of. I went and met him at the property. It was like really run down, but I knew I could take it on. And I think he asked for $290,000 on the spot. I said, I'll give you an offer on the spot. You tell me what you want for it. He said $290, and that was a great deal. At $290, it was an amazing deal. And my mindset is always like negotiate. That's how I've done well on other deals in the past. So instead of just saying, you know what, this is a great deal, I'll take it, I thought of the lowest number that I could think of that would be like almost offensive, but not where he's gonna like tell me to just go away. So I think I offered him like 220. And this is like a minute later, face to face, and he came down from 290 to 260 on the spot. And then we negotiated in between, and I got it at 240. And then I had him sign the papers there, and just off market deal.
Oh my goodness, that's incredible, man. I want to be there one time when you're negotiating one of these deals. That sounds great. It's so much better to just do it verbally too. Like, let's not bother with all this paper and email and stuff. Let's just get face to face and let's just shake hands and write up the contract.
It was a 10-minute conversation. We wrote up the contract and we closed on it 30 days later. And so the one thing that I do want to say is that the guy that I went with to go look at this duplex, I got this property under contract. He was the first guy that I called and asked him if he wanted to partner with me on it. Because I felt like it was the right thing to do, because I wouldn't have met this guy if I never met him. And we went through the whole process of getting it financed. And unfortunately, he wasn't able to get the financing on it. And I was going to close on it myself, but I ended up partnering with somebody else on it. So somebody else reaped the rewards of that deal too.
So you're JVing a lot of stuff out now for mortgage qualification purposes, I'm guessing?
Yeah, it wasn't working. I couldn't buy it.
Because you're getting too many in your own name, right?
Yeah. And I didn't even have a job at the time. I was laid off.
Oh, okay. You have a job again now?
No. So I got laid off last year in February. And what happened was I had my third daughter in September. And I had already told my boss before that, like several months before that, in September, I'm going to be taking a year and a half off because my wife hasn't worked for several years. So I want to take advantage of it. I want to take a year and a half off if I can, because we're allowed to do that. So what ended up happening was I got laid off. That rolled into my paternity leave. And then now I've been off for almost 2 years.
Oh, okay. Well, can't argue with that. You're obviously getting stuff done. So what are you thinking? Go back to work or just realtor it up and go that route?
So I promised my boss where I was working. He knows that I'm doing all the real estate stuff, and I promised him. He called me during my paternity leave, and he asked me if I'm coming back, and I promised him that I'm going to come back. So I am going to be going back to my IT job next year for, I don't know how long, but I'll be there. I will be there. You
should keep an open dialogue with him. That's interesting. I mean, I just can't see why you should do that, but I guess if you enjoy it, because you have so much going on, you're making so much money off of what you're doing here. I think I could be wrong, but I think your portfolio is more than enough to support you at this point, is it not?
Yeah, so it's supporting our lifestyle now. I think this is more of like I gave somebody my word, and they really actually do appreciate me at the workplace, and I wanted to follow through.
Oh, no, I agree with you completely. If you give somebody your word, at very least you want to talk to them if you want to change your mind, but you don't just go back on your word. I'm with you there.
Yeah, I might renegotiate. I might try to renegotiate. Like I won't work maybe the same hours, or maybe I'll try to renegotiate where I can work remotely a little bit more. But it's honestly a great place to work. I love my boss. I like the company I work for. It's a small little tight knit company, and it helps with mortgage qualifications. So
that is the bonus.
Yeah.
Okay. So we've got some questions here. So I could totally be pronouncing this wrong, but Juan He. Hi, Shawn. I heard that you invested in Sarnia as well. Did you renovate it or not? How did you remotely manage it through a GC or a property manager? I think that's the one you did with Jacob.
Yeah.
Jacob Perez.
Yeah. So that one that's just, I got to say that was like the easiest property that we've purchased and like forgot about it. It's literally a property that we bought, and then it's almost like you forget you even own it. So what ended up happening was there was no renovations. We literally didn't do anything to the building. We bought this property. So eight towns. It's a building with 8 towns, 2-story towns, for $800,000 in Sarnia, all brick, large lot. Really good cap rate. I think we bought it at like a 6.8 cap rate. And the cap rates are selling in that area for like 5 point something. So I don't know what kind of value it puts on it, but it's around 1.2, I think, right now. So we've made a lot of equity on that property. And that property, we didn't do anything. We literally handed it off to property management. So let's say we bought it in like February, March of last year. We hired the same property management that was in place, and we haven't talked to them for like almost a year. I don't know if is that a good thing or a bad thing.
No, that's an amazing thing. Well, I mean, you might want to pop in every once in a while just to see what's going on, but I mean, that's awesome.
Yeah,
this is like a lesson. This is a lesson in crushing it. Like every time I talk to you, it's just like, oh yeah, I just smashed out this massive BRRRR or this great deal. I really do think mindset's a huge part of it with you, because you got your mind in the right place.
Yeah, man, it is. Mindset's everything. And like, I want to talk about mindset because like I really like talking about mindset because I think that people get confused with investing in real estate, making passive income, making big decisions, you know, investing a lot of money or maybe investing all of your money and like taking on all these risks and things like that. But the reality is that if you get your mindset right, if you get over the fear that you have of making these decisions and you trust in yourself because you connect yourself with other people that are doing it and trust themselves, you will win. You will do it.
Do you find like sometimes like you feel like you know almost everything you need to know, you're not quite sure, but you just need to go anyway? You don't even feel like you know almost what you need to know?
No. Like no way. Oh no, like I a lot of the times it's like okay, I'm gonna do it. And then if there's a problem, I just trust myself, I'll figure it out. I will figure it out if there's a problem, but I'm going to go for it because I believe in myself enough. And that's where the mindset comes into play, because you believe in yourself enough to execute on something that might be scary to most people, but you're willing to do it and you'll reap the rewards because you're the one who's willing to do it.
What, and this is a question that we got on the question feed here, and it's on the line of questioning I wanted to ask you. So what motivates you on a specific deal per deal basis? Like, what do you look at as being, okay, that deal's worth my time? Like what does that deal need to have in it as potential for you to say, yes, even if I don't know everything I need to know, I'm going to go for it? Yeah.
So when I first started, because there's an evolution, when you first start, the most important thing is that it cash flows. The most important thing is that it's making you money and it's putting money in your pocket, right? And this goes back to the basics and fundamentals of an asset and a liability. If it's not putting money in your pocket every month, then you're not winning. And that's how I thought about everything. And that's how I grew my portfolio to the point of where it was, or it is now. And then you evolve because you don't necessarily care so much about $100, $200, $300, $400, $500 a month. And you care more about your return on your time, because then your time becomes more valuable. So then what you look for is, what is the best asset I can invest in that requires the least amount of my time? Okay.
And what would fall into that category for you?
Well, I'm not even there yet. I'm not at that point yet. I'm still ready to buy a house that needs tons of renovations. And if I need to go there and I need to, like, you know, sleep on a mattress like you did or sleep in your car, I'll do it. I'm still there. Like I'm not past that, you know, like, but the reality is like, if you wanted to invest in something like that, where you want the return on time, then you're just going to buy something that is either somebody else is going to deal with the headaches. So somebody else is you'll be the money partner. Somebody else will be the active partner, right? Or you buy a property that you have a team in place and you have a system in place and you don't have to deal with it. Your team is going to handle it. Right? Or you buy a property that is already cash flowing and is maybe a compressed cap rate. So instead of buying something at a 6 or 6, not a 7, but let's say a 5.5, 6.5 cap rate that needs tons of work, you'll just buy something that's like 3.5, 4 cap rate that doesn't need a lot of work.
Yeah. Eventually you'll graduate and you'll just, you know, that's okay. It's just hard to make a 4 cap work with cash flow whatsoever. I found that those are really tough to do. So we did have another question here. Yeah. So just the what motivates you both. So I think you shared quite a bit of it there. Is there anything else you want to add to that? Like overall, what's motivating you?
Oh, my motivation, like 100%, it goes back to my kids, man. Like I didn't start any of this like my mindset. I didn't start working on myself. I didn't start, you know, really educating myself on how I can become a better person until I had kids. And once I had kids, I realized like this life isn't even about me. It's about what I can do for my kids, what I can show them, how I can educate them, how I can leave a legacy for them. And all of that stuff was what got me into this and got me motivated to like actually invest and to grow and to become a better version of myself every single day. So my motivation, like 1000%, is my kids.
Wow, that's amazing to hear. So you didn't really feel like you had that motivation before it really kicked in once you had them?
No, yeah, 100%.
Okay.
I didn't have any of that motivation.
That's interesting to hear. Okay, so from my standpoint, my motivation initially was just like pain. Like I was just like I'd struggled a lot actually early on, even though I bought a couple of properties. So for me, I knew what it was to struggle. It was kind of like do or die, and that's why I slept on the mattress, slept in my car, did whatever it took to make it happen. I think you sold sneakers. You know, we do what we got to do.
Yeah,
And,
that's a real story.
yeah, you shared it last time. I listened to our last episode so I could remember all the things we talked about. So you kind of do what you got to do, and then I hit this point of success with it, and I actually kind of got a little unmotivated. I'm like, well, that was a lot of work. Like I don't want to do that again. And then it kind of got fun. Like I brought in my my former business partner, and we started just crushing it together, and it just became fun. Like it was kind of like a way to bro out and make money at the same time, and
Exactly.
and that became fun on its own. And
yeah, you just hit the nail on the head. So
yeah.
this is where part of the evolution also comes. Is in the beginning it feels like it's like you go through the stage where it's like work and grinding and hustling and hustling and hustling, and then you where I feel like I'm going now, especially with this like Belize stuff, what I'm doing here, this is fun for me. Like I really enjoy going around and like going to like beaches and checking out plots of land near beaches, or like beachfront parcels or whatever, and like looking and imagining and envisioning what I can build, what I can do, and how this could give me a return on my lifestyle and a return on my money. And that's fun. That's a lot of fun for me.
I love envisioning the deal. That was like my favorite thing. I would love talking to the engineer. It's like Lego, you know, like how are we going to do this? Like going to the house, like, oh, we got to carry that load down. We got to make this roof line work or whatever. Like we're going to put an addition on. And yeah, there was a lot of work involved, and I didn't love that part as much. I love the final product, and I love the planning of it. And, so you kind of find enjoyment in there. I know I did. But if you want to crush it like Shawn's crushing it, a motivation like kids or something, you got to be fired up, right? I think Tony Robbins says people are only motivated by extreme pain or extreme pleasure. And I think with kids, it's like, you want that satisfaction. You want to know that you did what you needed to do.
And my whole thing, Andrew, was that I didn't have anything when I was a kid. Mm-hmm. Right. So that was that like pain point, was that I didn't have all of the stuff that my kids are having now. And like, I wish I did. I wish that I had all that stuff, but I didn't have any of that stuff. And that's what kind of motivated me to say, you know what, I need to get out of my comfort zone. I need to grow as an individual, and I need to become the best version of myself so that I can give my kids the best that I can be.
Yeah, that makes a lot of sense. Okay. So Paula Sarnik, I hope I said that right. Paula, thanks for the question. So so she wrote, if you incorporate, do you need T4 income to qualify for mortgages? So I will field that one, and then you can add to it if you'd like, Shawn. But so how I pay myself out of my companies, I pay myself like a T5 dividend income, and I just keep it consistent. So as a self-employed, that actually saves me. I'm working with Scotiabank right now on some refis. It saves me from having to actually show them all my financials and everything. Like I just file my regular taxes with dividend income, and they're like, okay, that's good.
Yep.
So it works just the same as employment income for me. So I hope that's useful to you, Paula. I don't know if there was anything beyond that you wanted to explain. Do you have a strategy in the future that's going to involve something like that, Shawn?
Well, I have some corporations set up right now, but everybody's different, right? So like my corporation, like for example, I became a realtor like 10 weeks ago. I set up a PREC for that. That's a personal real estate corporation.
Okay.
And it's the same thing. It's just a corporation.
So you can dividend yourself out of that if you want.
Yeah.
So you can treat it exactly that way. Exactly. Yeah. So they'll eventually just look at you. And so here's the thing, like putting on the mortgage broker hat, guys, like they typically want to see 2 years consistent income. So you know, when you're first getting going, you're gonna have a small year, and then your next year's bigger, and they might work with you. I remember like talking to them. I'm like, well, look at my sales. Like I'd convince them. I'm like, I had 2 okay years, and hey, look at my sales for this year. Sometimes they'll get flexible with you, so there are ways to get it done. But you got to get scrappy in those early years until you show consistent income. If you're self-employed and you're doing this.
Yeah.
Okay, so which markets are you guys actively looking in for BRRRRs, and where the numbers are still working?
I'll give you a story. Yeah,
Yes,
yeah.
go
So
ahead.
I bought in Moncton, New Brunswick, like 3 months ago. I think it was 3 months ago.
You better have a property manager.
Yeah. No, I'm managing it myself. No, I'm just kidding. Yeah. So I bought that. I think it was like January, February. Yeah, it was like February maybe. That was, and the reason we bought that was because the cash on cash was like better, right? So we were getting a better cap rate. So I think we paid, so the exact story, true story on this was, it was listed for, I think 325,000. We offered 345,000 on a fourplex. So it was a purpose built fourplex in Moncton, nice building, fully rented. We offered 345, got it under contract, did an inspection. Inspection came back fine, got the appraisal from the bank. Bank says it's only worth 325. So we told the seller we're not going to buy it unless they can do 325 because that's all it appraises for. And the seller just said, okay. So we knocked $20,000 off the price because of the appraisal. And we have property management in place. So the play with this one is, if you don't know, they don't have the same tenant laws that we have in Ontario. So in New Brunswick, you can literally raise the rent to whatever you want as long as you give 60 or 90 days notice. So that was the play with that one. So I think the rents were like $600 per unit, and we plan to raise them to $950 per unit on each one, which would make us cash at like $1,000.
Wow. Yeah, I feel like New Brunswick's a good opportunity. Like if I was still actively looking in Canada right now, I'd be looking at New Brunswick and Alberta. I feel like those are 2 markets that make a lot of sense. To me, Ontario doesn't really make sense right now unless you want to go north to Sudbury, which I think is viable. Everyone's flocking there right now. I see all the investors in our community flocking to North Bay and Sudbury, driving those prices up, driving those cap rates down. It's going to happen. It was bound to happen. It's just not somewhere I really want to own. So I think, you know, for me, I would be more into Alberta and then New Brunswick. But right now I'm focusing on Florida, kind of like lining up a few opportunities in terms of how I want to proceed down here. I am looking at getting my my visa, investor visa. Yeah, so that I'd be able to stay here more than 6 months out of the year, and basically make this my tax home. There are some advantages to that. And of course, I love Canada, and I always want to be able to go home to Ontario in the summer. I love summers in Ontario, but we'll see how things shake out. And you know, I still have properties back home, and I'm just looking at kind of how I can find deals down here. There is better opportunity for cash flow down here.
Oh yeah, the cap rates are way better there.
It's getting pushed up though. Ontario's kind of similar, or sorry, Florida's sort of similar to like Ontario late 2016, like just really starting to heat up. Yeah. And the prices are getting pushed up. I see it even like from 2 months ago, I see it. Just the massive differences, but you can still get, you know, a nice duplex built in the last 2 years for in the 400s, you know, on city sewer and water, which rent out each side for like maybe 1,600. So like the numbers are okay, but when you pay the higher financing, it gets a little tricky. So for me, it probably includes some sort of strategy to do a BRRRR to make them work, right? I'm probably not just going to buy, you know, purpose built, and but it's not easy to just start from scratch. You really have to set down groundwork. So for me, I've just been going to investor meetups and doing all that stuff, and really, you know, even golfing with investors. I did that last week. So it's starting. You know, this is kind of how you dig your roots into a new market. For me, anyway. I know we don't have that luxury in Ontario or in Canada right now to go to live networking, but
how would you finance something there? And the reason I'm asking is because I had a condo under contract like 2 weeks ago in Panama City Beach, and it fell through literally on the last day. They told me they can't finance it because of all the properties I have.
Really? Okay.
Yeah.
Well, you can always do like kind of semi-private. Like you can work with a TD US branch or the RBC, but I believe that even TD caps you out at 4 properties, and they include what you own at home. So
Yeah.
so they'll just say no. So what you can do, like if you work with a good mortgage broker down here, I've heard a lot of people talk around, 6% is something that you should be able to do as far as an interest rate goes. So it seems to me like there's a lot of options. I've spoken with a few people who have said, yeah, 6% is doable. Even for me, without a social security number, any of that, they'd still be willing. But that's a lot different from the 2% at home. So you got to make those numbers work.
Yeah, I got to do some more research. That was with RBC that they backed out last
Yeah,
minute, and it was a good deal.
the Canadian banks likely just aren't going to work unless you at home don't own in your own personal. Hang on, I'll switch this over.
Yeah.
If in
We have
Canada
another
you
question here.
yeah, okay, go ahead.
Paula was thinking in reference to Shawn mentioning he couldn't qualify for the fourplex mortgage. If he had enough income from his portfolio, what held it back? Yeah, that's actually a pretty good question. So when banks look at your portfolio income, they're not using 100% of rental income. Most banks are only going to use a percentage. So depending what bank you're with, they might say, okay, well, it's 50% from this one. Yeah, like every bank has different rules. But if you're making $10,000 a month in rental income, the banks might only use $5,000. So that's basically it, right? And it's crazy because you can literally show a bank like I have enough money to buy this house cash 5 times over, and they may still not qualify you.
Yeah. Yeah, it's tricky. It's tricky with every different bank. So Scotiabank, they'll do like each property on its own. I think they'll count 50% of your income, and they count that against your mortgage and property tax. And as long as there's a surplus there, that property's a wash and it's not included. So whereas other banks, like you said, they'll use a different number, different qualification rate. So yeah, it really depends. But one thing I would say to that question, Paula, is that if you work with a credit union, sometimes they're a little bit more flexible on that kind of thing. And they actually might consider your portfolio income and actually use that. They might, even if it's from real estate. I know a guy who bought 10 properties without a job and just living off of his rental income. And they were okay. But then they tapped him out after 10. They were no good after that.
Yeah, totally depends. Every single scenario is different. There's been cases where I purchased a property, let's say, and then the property cash flowed well enough that immediately after I bought that property and I refinanced it and I was getting the cash flow and I can prove that I got the cash flow, I immediately was able to purchase another property for more than I was approved for before because the cash flow was so good. But
because it added cash flow back.
Yeah, it's like getting a raise. Yeah.
The traditional way the banks qualified was they would take 50% of the income from your property, and then they would add 100% of the expenses from the property to your application, which is basically like application suicide unless your property generates like 3% rule. And that was kind of like the bank's way of excluding most applicants without saying no. See, banks don't like to say no so much. They'll usually just set the qualification so difficult that no one qualifies. And if you're a crazy scenario that does qualify, they're like, oh, he makes a lot of money. We'll take a risk. So that's what I noticed in my time in the banking world, mortgage brokering world, is that very rarely is it a yes and no thing. It's more often a really extreme, difficult qualification thing, which I would just prefer they be straight. Hey, we don't do this business anymore. But no, they just, in the contractor world, we call it F off pricing. Like they give you a price. They give you a price that's like it kind of like telling you to F off. But if you're crazy enough to pay the price, they'll take the business.
Sure, we'll take it.
What, you said yes? So contractors don't really say no. Some of them will say we're too busy, but a lot of them will just say, well, we're busy right now, so we could do that job for. And some of them, I just laugh at them. I'm like, no, really, what's the price?
That's amazing.
Yeah. Anyways, Shawn, where do people reach you if they want to connect with you or follow your journey?
Best place to connect is going to be Instagram. So Shawn Rea, ShawnRea. So Instagram, Facebook, same thing. And you can reach out to me through my website, but it's kind of outdated. It's reaig.com, but I would just do Instagram or Facebook. That's the easiest way for sure.
Yeah, it seems to be the easiest for everyone these days. And then any words of wisdom? I know we've shared a lot here, but anything you'd like to share with the people who are continuing to watch? And then, of course, we'll have our replay and the audio version as well.
Yeah, you know what? I'm gonna give the same advice that I give to like my 8-year-old is that no matter what, whenever you're making decisions and you feel that you have that fear of failure, if you push forward and you get past that fear of failure, no matter what, something good will come out of it. Whether you're learning something through failing or whether you're successful. So the one thing that you have to get in your head is that failing is okay.
Mm-hmm.
And if you can get past that, you're going to be okay.
Yeah, that's awesome. Yeah, failing is okay as long as you can control your downside. You just gotta make sure you got a plan B,
Yeah.
maybe plan C.
Yeah.
That's my approach anyways, but I
Yeah.
appreciate that. Shawn, that was awesome. And thanks to everybody who was attending. I like these. Should do more of these.
Yeah, no, for sure. Andrew, thank you so much for having me on.
Yeah.
I appreciate it.
Yeah, round 3 is great. It's always great having you on, Shawn. I'm sure it won't be the last time.
Thanks, Andrew.
Okay, so we're gonna end this stream. Thanks everybody for tuning in. Okay, sweet. I ended the stream. We did